Welcome. We are back. What's up, Danny, Lindsay, Glenn, Mecca, Nerve, username NF in the chat. All right, so it's a little bit of a short week in the market. Thanksgiving on Thursday, and then an early close on Friday. But before both of those days, we have FOMC minutes on Wednesday. So today and tomorrow, a little bit calm, but the next few days after that, probably a little bit hectic. Market is showing a very common pattern. I've talked about this pattern multiple times on the stream. It's a very repetitive phase that the market likes to create after larger moves. If you saw the thumbnail, you already have an idea of what it is. So I'm going to talk about that, how you can trade that without financial advice, and how you can make sure you're managing your risk well. And then Mecca in the chat is asking, is the damn market going to give us some green days anytime soon? I hope so. We just had a pretty nice rally though. You never know. And whoa, the chat's being really weird right now. But Bitcoin and Ethereum, let's start off with that. They are both at multi-year lows pretty much, continuing to sell off. It looked like for a little bit you were breaking out on the 4-hour. Like you had this little move up and then boom, just dumping again. That's what's tough about bullish patterns and bearish trends, because you can just keep redrawing them until you break down, and then you just break down. It's kind of crazy. But right now you are getting a little bit of 4-hour classic bullish divergence. You're a little bit oversold on the RSI. You kind of do have classic bullish divergence on the daily RSI as well. So it's not that bad. You are getting some oversold variables appearing for Bitcoin. It's kind of in the middle of nowhere. I think major support is down towards 14K because that was your top from 2019. That just makes sense to me as the next level for Bitcoin to visit if we're just going to be talking about horizontal levels. We'll see if it gets there. However, on the weekly, you kind of still are back testing this wedge. And I talked about this a couple weeks ago. Even though we broke out over here, this is a weekly time frame chart. So you can back test this wedge down to the support level and then maybe start to go. I think the big question is, can Bitcoin just stay above 14K? That's probably the biggest hope for Bitcoin at this point. It's seen a very, very large sell-off. Kind of looks like the, keep forgetting the name of it. There's like this, what's the name of this chart? It's like the classic chart that everybody likes to use. Forget what it's called. I think I know the name. This one, the psychology of a market cycle. It just looks like another one of these, to be honest, right? Just put it up over there. That's kind of what it looks like. And yeah, I think you're towards the bottom, hopefully, maybe. We'll see. Let's take a look at the weekly oscillators. You are showing a little bit of hidden bearish divergence, which implies some more selling to the downside. So I don't know, mixed variables, but I think short term you are getting oversold. And then Ethereum gave up the very important support zone, which was this whole entire blue zone over here. You were testing it, and you broke under it. So you've now pretty much matched the lows of the last month, or this month in November, finding a little bit of support just under 1100. Major support is around 1000 though. I think maybe that's like a more technical level to test. And then on the weekly, you had that same wedge formation. We could probably extend this a little bit, kind of like that. And you could see you had a breakout fail. You've also got hidden bearish divergence here. And I'd say the next big level is around like 883. It's this low from this year, but also some highs kind of from April of 2018. So those are your next levels for the cryptos. Moving on into other markets, the US 10-year is getting a little bit of a bounce. We go down to the 4-hour chart. This kind of just looks like a bear flag to me, like this. And this could be a bat forming maybe, let's see. Could pretty much be in a bat action magnet move, but actually at the same time the bat already completed, so forget what I just said. You actually did get a bullish bat form on the 4-hour, and it's actually moving off of the PCZ already. So I'm a little bit late for that one, but it looks like it's already playing out. And then on the weekly, you did print a bullish pin bar candle last week, but that's really it. Your MACD also confirmed classic bearish divergence, and I don't know, if you were to continue pulling back, I think down to around the lower 3% area could make sense to backtest this right angled descending broadening wedge breakout. Moving on to crude oil, that breakdown I talked about for the last couple weeks is playing out pretty nicely. You've pretty much gone down to this $76 support, which was your low of the year. Actually, yeah, pretty much your low of the year. And you got a massive bullish pin bar off that level today, which is pretty nice to see. On to metals. Gold is continuing to pull back after perfectly. I mean, I've had this resistance charted since we were like down over here. You ran right up to it and you've been pulling back off of it. You do have a little bit of support here from these highs and lows from August and September. So you're pretty close to that. That might be a bounce level. And then silver, kind of the same thing. It's back testing these highs from August and October as potential support. You did also get a bullish pin bar here today. And you're working on a bullish engulfing candle, but there's 20 hours left in that daily candle. Moving on to the dollar currency index, you got a bounce off this 105 support. You could see it was highs from June, somewhat lows from August, and also around your 200 moving average. Yet another bullish pin bar. So a lot of these alternative markets are showing us bullish pin bars as the stock market just had a rally. That's not a great sign for the overall market. And things are also looking a little bit different. Let's head into that right now. What is this pattern I speak of, this textbook market pattern that happens time and time again? We are in a distribution phase. It's not the same thing as Wyckoff distribution. This is just market distribution. You had a melt up move, a very good move, and right now you're just consolidating, going sideways. What a lot of traders and investors and funds like to do after large moves in the market, whether it is a really good move to the upside or a large sell-off, is kind of sit back for a bit, because nobody knows whether this is about to be the top and you're about to reverse, or this is just a little pause and then we continue going higher. It's just distribution. It is an equilibrium where you have pretty much the same amount of buyers and sellers in the short term, causing the market not to be able to move. And all that really matters when it comes to these cycles is which way you break. It kind of just turns into a coin flip, but it does make things easier when you finally break out. Now, this could last some time. We've had this same exact pattern multiple times this year already. We had it over here. We had it over here. It's very simple to spot it. It's not a confusing pattern. It happens pretty much whenever you get a large move. You could see you had a large move up, distribution, but your distribution broke up. You kept going up. Then you had a large move down, distribution, you broke up. Another large move down, distribution, you broke up. And then you broke down again, and now you're seeing, again, distribution. It happens time and time again. It's pretty much what you get in between any sort of short-term cycle in the market. You can see all of these times where we had it. So this is nothing new. We've been seeing this the whole entire year. We're just seeing it yet again. And typically, it could make for good day trades because you know that the range is kind of small. So going back and forth on the 5-minute and the 15-minute can be a lot easier. However, it becomes very hard to swing trade when you have this type of a move, or this type of a not move in the market with no with consolidation with no move. So typically how I go about this is day trading, and I just wait for the eventual breakout. And then sometimes I actually do like to swing calls and puts when you eventually break out of your range. For an example, let's say the SPY was to close above 401. That could be a signal to swing calls. Let's say you broke under and closed under 390. That could be a signal to swing puts. It's a lot easier said than done. Obviously, you have to manage your risk. And in between all this distribution, I think we still do have a little bit of a bull flag forming. You've been testing this trend line nonstop on the 1-hour chart. I talked about this last week. So at least for right now, because of this flag, I'm getting the impression, just the impression, that at least this could happen. I don't know if it's going to be enough to break us out of the distribution cycle, because honestly, all of this is a distribution cycle, but it could get us back up to at least test the top of this short-term range that we're in if we can break this trend line. Even if you go over to the 15-minute, you have this triangle heading into tomorrow. This is what can make day trading fun. Even when the overall market is going sideways and we're not getting much action, like let's say if you're swinging a stock right now, you're probably not seeing a major loss or gain unless it's like some news comes out, it's earnings or whatever. It's just like the average stock right now. So it's just a quiet period for stuff like that. But when you have these massive patterns set up, even within your distribution range, I'm going to chart it again on lower time frames. All of this is a distribution range. But since the volatility is so small, once you get some sort of a breakout and the volatility increases, you can actually see those premiums on whatever call or put contracts you're in, depending on which way you break, really multiply and start to speed up once you break out. So let's say you're in $2 calls for the SPY, or let's say the premiums are $2 on whatever calls you have for the SPY, which is $200 a contract. And it's just been kind of going sideways. It goes up to like $2.20, then it goes down to like $1.80. And it's just, that's all happening within this range. You're getting those like 10% moves in both ways, whatever. You get a breakout like this and it actually plays out. You can see those go from $2 to $4 very, very quickly. And that's the fun part about being in at the right time, but you have to time it well. And that's not too easy. You want some help with that. I did post a video for all of you on my channel yesterday. I think it was yesterday or Saturday. I did another 30-minute workshop for premium members, and I made that lecture available to every single one of you. It's the last video on my channel. It's called How to Find Option Day Trades or something along those lines. Go and watch that. It can help you out with stuff like this. So that's what I'm looking at on the SPY. The Qs are also continuing to back test their previous resistance from October. As a support, you held it on the 17th. You held it today. So that big level to hold is around 280. You're barely hanging on to it. I'm probably going to redraw this flag a little bit. So you still have the 1 hour hidden bullish divergence. You still have the flags, and it's not just on the indices. There's a lot of individual stocks like AMC that are showing the same exact thing right now. So this is kind of happening everywhere right now. I think it could indicate the next move being up, but maybe that's not a huge move because you're still in distribution range. However, let's say we break out, we get the move up, we get over here, we struggle for a bit, whatever, and then we just flag again, and then we break up. So there's so many possibilities that can come from this. It's just a question of waiting or seeing what the next move is. But little flags like that, like how we're seeing right now, especially when you're flagging into a previous resistance, I think it does give you the edge, maybe a 60-40, 65-35 edge, that at least the next short-term move is up. We will see, however. Futures are pretty much flat. There's not much of an indicator going into tomorrow currently. But that's really what's setting up for right now. Moving on to the Russell 2000. This one looks a little bit different to me, where the Qs and the SPY look more like distribution. The Russell is just different. It's almost confirming hidden bearish divergence. This kind of can be looked at as just one large bear flag in a bear market if we just zoom out over here. It's not as good looking. I think the only way that my mind can change on this is breaking above this area. Getting over here. You're probably not going to do it like that. You're probably not going to go backwards, but getting above 188 would be key, because then you're breaking above these lows from earlier on. You're breaking above your most recent swing high, even this high from June, and then also the 200-day moving average. That is the big level for the Russell 2000. And then we have the ARK ETF. It's hard. It's really hard to use technicals on this lately, because you break down and then you go back up, and then you break out and then you go back down. It's just not that reliable right now. So I'm not placing a lot of focus. I know we've talked about the ARK ETF on a lot of my streams over the past couple of years, but right now it's just way too confusing to do much TA on it. So I'm just kind of looking away from it for a little bit. I just want to see how this ends up in a month or two. But for right now, just trying to use short-term technicals on it, it just hasn't been working. And that's just going to happen. There's going to be certain assets where it's really easy to use technicals on them in certain times, and vice versa. There's going to be times where it's really hard to use technicals on them. And the main determining factor of that is how confident investors or traders are in the next move. If everybody's confused and don't know what's going to happen, for an example, right now the ARK ETF, it's at a huge discount compared to it was, so that could be a good case for the bulls. At the same time, all it's done since the beginning of 2021 is sell off. That's just a good case for bears. It just creates such this big confusion that if you're seeing confusion as traders, technicals again are representing how traders are feeling. And if traders are confused, the technicals are not going to be giving you good readings. So we're just waiting for clearer setups and more digestible price action. Next up, the VIX. It's testing these lows from November 11th. This is a pretty big zone. It even dates back to right over here, August. So I don't know. You're starting to look like it could bounce soon. That's how I'm going to put it. And if that does happen, hopefully we at least get this little 1 hour bull flag to play out on the SPY first. So let's say, for an example, this 1 hour bull flag plays out, you go a little bit up, but then maybe the VIX starts to bounce when you get up to this huge test area, which is the top of that distribution range. And then maybe we reject it and then we start pulling back again, because remember, even if we do go up a little bit more, you're running into a lot of resistance in the mid 400s. So this looks like a flag to me. Something like this, of course, on lower time frames. We can break up, we can have fun, but you're going to run into a lot of resistance. And at that point, and probably at some point, the VIX will find its breakout, maybe confirm this bullish bat, and that's when things change. So if you wanted me to give a fun little prediction, which can really change by tomorrow, it's next move maybe up, go up a little bit more, hit resistance, the VIX starts bouncing up then, and then we reject this whole entire area of resistance, then we put in another bear market rally high, start selling off again, hopefully find a low so we can get that Santa Claus rally in about a month. That's my hopeful scenario based on what I'm seeing right now, but you never know. We literally have FOMC minutes on Wednesday. Also, funny things tend to happen whenever we have like half days and days off towards the end of the week. A lot of investors trade a little bit differently, or traders trade differently, and investors invest differently. So we will see what happens, but that's my read on the market right now. This is the market distribution cycle that we are in. Moving on to individual stocks, the only ongoing swing outside of premium right now is Fisker. If you wanted to ever take a look at how many swings I have out, this is pretty much it right now. There's like 5 premium swings right now. There was a lot more a couple weeks ago, but most of them hit targets. You can probably see like right over here. A lot of them hit targets. But right now, apart from that, it's just Fisker, which is sitting right literally to the cent at where I alerted it probably a few weeks ago. It's been in profit. It's almost been stopped out. Right now, it's just back to where it was. So in terms of Fisker right now, I think in general holding above 650-ish is good. You found two very well-defined lows there. You're clearly outside of the wedge. Pretty much any way you draw this wedge, you're outside of it, so there's not a lot of confusion there. And that's all good, but you are still back under, which is ridiculous to me because you broke out of it twice and now you're back under it again. But you're back under the important $8 level. That was where you found multiple lows earlier this year. Then you broke under it and went to 650. You're struggling to hold that. And I think until Fisker can confidently hold above that level, there is added risk. You also have classic bearish divergence because you did make a higher high on price with a lower high on both the MACD and the RSI. So there are some bearish things happening short term. On the 4-hour, I kind of have a backtest view right now. But the only thing I'm connecting on this supply line is literally the top and then this most recent high before the breakout. So it's not the clearest trend line as well. I mean, you could even have looked at it like this and it's just really messy. So the big picture is, and you make any low higher than this one, because if we really zoom in, this second low was a higher low, which is a very quiet indicator of a trend reversal, having a very quiet higher low. So if we can make any low that's higher than that, and then eventually get back above 8, that's at that point 3 consecutive lows that are higher, moving up into a resistance point. That would be bullish. So I'm not too worried short term unless you break under 650, then that would be like a nightmare. But as long as you can continue to hold that and get back above 8 and actually hold it that time, nothing is that different. All right. Also, it was nice to see a little 4-hour bullish engulfing candle to close the day. On the 1-hour, you already might have a wedge forming here, something like this. So we'll see what happens. And that's really it. That's literally the only ongoing swing right now. I'm just going to talk about some other stocks really quickly. First off, AMC. I've been talking about this for like a week now, and it's still the same thing. AMC had made a very good move. It hit like almost 3 targets of the premium swing and almost got to that 3rd target. And since then, it's been flagging out. I'm still keeping an eye on this. Don't be surprised if one stream in the next few days, you see a move like this out of nowhere. Like it's been consolidating and flagging for a week, pulling back into previous resistance that could flip into a support, give hidden bullish divergence. That's what you look for in terms of a trend continuation. It's a lot better than doing this. This is the other thing you get a lot of the time. You go up, you go down, and then you do this. And then you create your harmonic, and then it's bullish. But this is a very nice way to consolidate and flag downwards. It just has to hold. And hopefully it does. So we'll see what happens there. Doji candle today. GameStop. This one, it's been trying so hard. It tried to break back over 20, and I've been talking about this one quite a bit. And it failed to break out, so it's just still consolidating in its very large range here as well. So still waiting on that one. Moving into large caps now. Actually, we'll talk about CLOV first. Again, a lot of people ask me questions about CLOV. I've been covering it every night on the stream, and I've been saying the same thing. It's just not a technicals game right now. I said the same thing about the ARK ETF earlier. It's just not at a place currently where technicals matter that much. I think it comes down to your fundamental opinion. My fundamental opinion is that CLOV will be at higher prices one day, but I also understand that the risk is obviously there because if we go over to the weekly, all it's done for pretty much since it hit all-time highs is go down. So the risk is still there. Just because it's at $1.24 doesn't mean it can't go to 75 cents. It could. I hope it doesn't, but it could. But even if it, losing my voice, even if it does, I still think that it goes back up to, I'm not going to say any actual price, but I still think eventually it goes back up. It's just not its time right now, and hopefully one day it'll be its time. And I'm not trying to get so philosophical with this, but there's nothing really to talk about on technicals. You can make as many patterns as you want right now. It's just not really following anything except a downtrend for the time being. So we just have to wait until that ends. and I'm sure it will at some point. Hopefully it will at some point. Now moving on to large caps, Meta made a pretty nice move off the lows. Now it's starting to pull back a little bit. We go over to the 4-hour chart. You got a little bit of hidden bearish divergence because you did make a lower high. Your MACD made a higher high, so this is implying maybe some more downside. There are some gaps to fill. The first one, and this is actually a pretty important level, is around 103. You have this gap fill from November 10th, and then also this high from October 27th. So that's kind of the next level for Meta if it does decide to go fill those gaps. Apple is starting to give up these highs a little bit. If we go over to the 4-hour chart, remember that inverse head and shoulders we talked about last week? You did reject that breakout, and now you're developing hidden bearish divergence. So if there's any time you want the SPY 1-hour flag to play out to save a lot of these charts, it's probably like tomorrow or the day after. So hopefully it saves some of these charts, but they're starting to kind of flip variables. And again, this is happening when the VIX is making new lows. But if we go over to higher time frames, when the VIX is also almost at the PCZ, and this is something I've been talking about for weeks, of a bullish bat. It's not there yet, but if it drops down to around 21, which is only 1 point lower, got a gap fill waiting for you and a bullish shark PCZ and probably classic bullish divergence. This is the type of thing that could top out the market. So if that completes, I will be talking about it. I'm already kind of talking about it, but this is the one thing that you do want to keep in mind in terms of risk for the overall market right now. Amazon rejected the retest of the $103 level. I did say that that gap fill could be next. It's almost got to the gap fill today. It went down to 90.59, and the gap fill is around 89.50-ish. So it's getting closer and closer to that level. It's still kind of in a wedge, just extending a lot of these wedges. So it's confusing because the VIX is almost at that bullish bat PCZ, but we do have so many 1-hour wedges with hidden bullish divergence. So again, like I said earlier when I was going over the market, to me it just kind of implies maybe you do get like a short-term rally off these wedges, but nothing too crazy. And then the VIX hits the PCZ, and then we continue downwards. But we'll see what happens. And then Tesla getting destroyed. I talked about that bear flag. We've talked about the weekly disgusting head and shoulders toppy looking formation. It's gross, and it's playing out in front of us. The next level on the weekly is around 154. There's a lot of weekly highs here from the end of 2020, and you have now broken the neckline of your head and shoulders, the critical zone, whatever you want to call it. You've broken that. So it's in a new part of the chart. It's on the, I don't even know what word to use, like it's on the lower side pretty clearly. So I don't know. If we drop some more down into that level I just talked about, around 150-ish, you could see it's these highs from over here. You could get an alternate bat. So around $150, maybe you confirm some classic bullish divergence. You hit the PCZ of a bullish alternate bat. You're at support. That's probably the next level I'd be keeping an eye on. There's really not much until then. You're kind of testing this little high over here from like September 1st, 2020. That's what's being tested right now. If you break that, then 150, it's like right on due. I think 150 is a better level. I'd like to see it test that level instead of just randomly reversing here, but we'll see. And then we did a Microsoft green today, and I talked about this wedge breakout last week. It's been back testing the wedge breakout on the daily, but on the 1 hour, it's also creating a little bit of a flag and testing a breakout of the flag, very similar to the SPY. So again, these 1 hour charts, they're looking pretty nice. They have been for a few days. It's just a question of can they break out and play out a little bit before the VIX hits that PCZ and maybe screws everything up. And that's why I'm not putting out swings right now. So we'll see. That's pretty much my updates on everything. As usual, my tea has gotten cold. And let me read the chat for a second. FOMC is December 13th, along with CPI and then rates on the 14th. That is going to be a crazy week. Levi saying might have to add more to the old due diligence over the long weekend. I hope you do, because that was great. Having a feeling the short squeeze stocks are going to see around end of week and next week. I mean, I hope so, but we'll see. Gold Miner says if the Russell looks weak to you, then to me that means more lows overall for the market. The Russell has led the move lower the entire time, but it's also underperformed. It's also lagged on the moves higher at the same time. But I get what you're saying. And Levi's thinking, still think we hit low to mid 300s on SPY. Let's see how far that is by June of next year. I mean, that's pretty far down. From here, it's about a 22% move lower. Kind of your highs from 2019 before you broke above it. And Darwin is saying last year Santa was weak from what I remember, and I am probably wrong this year. I don't expect as many tax wash sales. Just a dumb guess. Everything's possible and not possible at the same time. Lindsay Glenn says, listening to Champ say everything I was thinking on SPY makes me feel good about myself. Hey, it makes me feel good too. It's great that we're thinking alike. Unless we're wrong, then that's horrible. We'll see. Meg says, thanks, Champ. You're welcome. 65 says, of all the people whom I follow, you're the top 3. Thank you. And 65 also said, thoughts on the broadening wedge on SPY approaching the upper trend line. It's concerning to me. That's why I said earlier, I don't see the strength in the market after the move we already saw. The volume starting to drop, the upper Bollinger Bands. I don't see the strength in us breaking above this now. However, if we can get up to test that level, there's a 70% chance, even higher than that technically, like a 74. Let me find it. Let's see if I can find it. If we can get up to that test, there's like a 70, where is it? Well, this is for broadening tops. Let's see if I can find it. Oh, here we go. So this is from a random website, to be fair, but it says partial declines correctly predict an upward breakout from descending broadening wedges, which is this pattern on the SPY, 76% of the time. So if we get up to test that breakout of this broadening wedge after putting in this partial decline, which means on the decline you did not go back down to the lower trend line before going back up to the upper trend line, which is your partial decline, since you've already cemented that, if you confirm it by testing a breakout once again, there is then the 76% chance of breaking upwards. So it's weird. It's weird because you would have that high probability of breaking out if you were to test it. It's just there's so much resistance there. And you're probably going to see very bearish looking oscillators at that point. Your 200-day moving average is probably going to be right there. You rejected it over here in August. You rejected it here in April. It's this previous zone of support and resistance. There's just so much there that, like, I don't know. I feel like maybe for that it might be more of a 50-50 than like a 76% chance of breaking out. But we'll see if/when we get there. All right. So, and then I am saying top 1. Thank you. Thank you. I'll take top 2. I'll take top 2. You could put Mitch Ray or somebody else at top 1. All right. So that's my thoughts on the market and everything else for the most part. If anybody has any ticket requests, feel free to drop them in the chat right now before I head out. Already been about half an hour. Again, if you didn't watch that video last night or Saturday or whenever, go watch the last video on my channel. If you're interested in making profits when the market's being like this, that's the video to watch. All right. It's literally me giving you a silver platter on how to find day trades with options by yourself. So go watch that. Honestly, the last like 4 videos of the course are all just like my options strategies for short-term profits in a very weird market, which is this market. So if you see me putting out premium alerts and stuff, and maybe you can't join for whatever reason, or you don't want to join, I'm still giving you the education in some forms to go learn how to do it yourself for free. The link is in the description of this stream. It's literally right there. There's no excuses if you're not putting in the time to watch that. There just isn't. All right, so we have a couple ticker requests here. I haven't looked at IDEX in so long. We used to look at it like all the time. So BARK is just in a range right now between like 160. You could see this previous resistance flipped into a support, and around $2 is your resistance. That's literally it. I'm not seeing any edge apart from that. It's just which way does it break first. All right, sorry about that. We were looking at Bark. So now we're looking at IDEX. All right, I haven't looked at this chart in a very long time. Yikes, first of all. Breaking under COVID crash lows. You do have some classic bullish divergence on the daily, so that's not bad. You're still oversold, so you're getting oversold variables. You did get a bullish pin bar over here, but getting above 28 cents, 29 cents will be very big. I already have like a lot of larger levels charted out here. It's a very choppy chart, to be fair, but I don't know. This kind of looks like a bearish pennant to me. It could break up, but it's called a bearish pennant because it's making a small triangle in a downtrend. Got hidden bearish divergence. So I think the weekly looks a little bit better than the daily, but you kind of have to get back above those COVID crash lows to be comfortable above support. All right. And yeah, I'm not seeing any of the takers in the chat, so we can end it here. Make sure to hit the like button if you don't already. Hit the subscribe button. Check out the links in the description. Premium, the free Discord, the free course. And I don't think my TradingView referral link is there anymore. I think I deleted my referral links from the stream. But there is like a 60% sale if you get the premium version of TradingView. There's pretty good discounts. I mean, I think I literally have it right here. If you want my referral code, it's in the announcements channel. I put it there today. 60% off premium. This is what I have. Everybody asks me what charting software do I use, what TradingView plan do I use. Every Black Friday, I do this and I extend it. So I think I have like another 2 years of premium right now. It's 60% off. And if you don't want that, 50% off for Pro Plus, 40% off for Pro. I'm not sponsored by TradingView. I genuinely wish I was. I've literally asked them to sponsor me before, but I'm gonna have to wait a little bit longer, it seems. But this is my referral code if you do want to use it. Announcements channel, the Discord, and that's going to be it for tonight. Thank you for watching the stream, and peace out.